Okay, so today let's talk about the ICT daily bias. This is, to me, one of my favorite concepts of ICT in general, and I think this is one of the concepts that I had to understand in order to become profitable with ICT. This concept alone not only increased my strike rate by a lot, but it also allowed me to get funded with over 7 figures this year. So let's dig into the charts and let me explain to you how I look at the daily bias. And I want to preface this video by saying that there's no way, shape or form that I'm even meaning that I came up with this. This is basically the way that I look at the daily bias, the way that ICT teached it. Now, one of the things that I also want to say is that don't only take it from me if you want to learn from ICT. Go to ICT's channel and I'm going to link in the description one of his ICT daily bias videos and look at how he looks at the daily bias. So this is my interpretation of it. This is how I look at the markets every single day and how I look at the daily bias every single day. So let's jump onto the charts. I will explain to you how I look at the daily bias, and I will also show you 3 trades that I use the daily bias on. So let's get into it. Before we get into it, I'm also opening up a Telegram now, so I will help you more with your daily bias. I will be posting more often about my daily bias and trade ideas and so on. So if you want to check that Telegram, it's going to be in the description. So let's get into the video. And again, if you want more support, then it's going to be on Telegram. So hope to see you there. Okay, so this is euro dollar on the daily, and we are also going to be looking at the DXY on the daily because those are the 2 things that I look for in terms of daily bias. Now, before we go on to the charts, I really want to hone in first on how I look at the daily bias. So when I'm looking at the daily every single day, I am looking for 2 things. I'm looking for sell side and buy side liquidity, and I am looking for fair value gaps, order blocks, and volume imbalances. These are the 2 things that I'm looking for. And what are these? These are draws on liquidity. So in my mind, when the price is moving, it is moving from pockets of liquidity to pockets of liquidity. There is something drawing price to go somewhere. And to me, that is sell side and buy side liquidity, which basically is most recent highs or lows, or old highs and old lows. And when I'm looking for daily targets, that's what I'm looking for: fair value gaps, order blocks, and volume imbalances. So this is what I look for the most. The same thing, by the way, we can change this into the weekly bias. And one of the things that I want you to understand is that price is fractal. Whatever happens on a weekly candle, you can see happening on a daily, 4-hour, 12-hour, whatever it is. The draws happen the same every single time. But one thing you have to understand, that the lower the time frame you go, the more price is going to disrespect what you are looking at. That is why you need to base your analysis in general on the weekly and on the daily. That's why people say that the trend on the 1 minute is going to be much more disrespected than the trend on the 4-hour. Just look at the chart. It will be much easier for you to notice really good trades on the higher time frames instead of the lower time frames. That's just because the lower time frames carry a little bit of more noise, and that's one thing to keep in mind. So normally my daily bias is derived from me looking at what I think the weekly is going to do. So for example, if you remember one of the videos that I made not long ago, I said that I don't know where this weekly candle was going. I took a loss in a winner in this week because we had just swept this high, we had just tapped this volume imbalance, and this weekly order block. Price is likely to come into these down close candles, which was my target for today. And I kind of took a small win today, a $1,600 win, and it wasn't a full take profit win by 3 pips because of me being a little bit off with this weekly target. But either way, this came to show to me once again that when I have patience and when my weekly and daily bias is clear, that's when I take the most amount of winning trades. So for example, when I made the video of me passing the true Forex funds in 2 days, people said, oh, it's gambling, it's gambling, it's gambling. To which I would say, maybe yes because of the risk management, but no because the trade ideas were all there. So what do you see here? Price, as you can see, is moving on an uptrend. Move up, move down, move up, move down. These lows are being respected and momentum is being injected into the market. It left a fair value gap right there. We tapped the fair value gap and we finished this weekly extremely bullish. So think about this. The trend is your friend. And so what you are looking to stay with the trend and you are looking to remain bullish to target these highs eventually. So when you see this weekly candle closing, your bias on the daily should be bullish. If we go on to the daily, what can we expect? We can expect a small move down, once again, maybe one bearish day, or at least one beginning of the week that is bearish, followed by a big impulsive move up, or a move up to target these highs first, which was my first target. Then I wanted to target these highs, which are also old highs right there. And then we have these basically relative equal highs. What happens? We have small move down in the beginning of the week, followed by this move up. So now we expect the next day to small move down, again, power of 3, I'll make a video about it, followed by this move up to break this high on this day. So we're still bullish on the day. What happens? Move down, sweeps the high. Now, this is where you can start thinking, okay, we've just swept the recent high. It's possible that we now move lower before we move higher, because we swept the high and we closed with a candle below it. But this week was different, where we had a little bit more news and prices ended up shooting up onto the buy side liquidity, and it definitely just rammed through this, and it actually went for old weekly highs, which are also here. So that's why on that week I was entering in so many long trades and I was risking a little bit more, simply because the market was looking really clean and a lot of momentum in the markets in order to reach for these highs and to reach into the volume imbalance, the 50% of it, the order block on the weekly, many things. So every time you are looking for the daily bias, I want you to understand this. I want you to ask yourself, what are we in? Are we on an uptrend? If I tell you to draw an uptrend, this is what you are going to draw, right? The same thing with the downtrend. This is what you are going to draw. So I want you to notice something in what you are drawing when I ask you for an uptrend and a downtrend. What does this show? It shows that after this leg up, the short-term move down does not disrespect this move up, and it respects these down close candles that are going to be left here. And so, as you can see, this is basically everything that you always draw. It's always been in front of you. You need to understand this. So we have this move up, once again, move down, does not disrespect this low, respects these up close candles, then proceeds to continue moving up. The same thing with the move down. We have move down, retrace, move down. So now we are supposed to respect these up close candles that are going to be left here, and we should not disrespect this. One of the things that is important for me to tell you is that for me, the high and the low, they can be disrespected with a wick. But to me, the market shift only happens once you have a solid candle close against my bias. So let me explain what that means. So right here, we already had this weekly target for some time. We had this volume imbalance, and so as we were hanging around here, I was noticing we are leaving highs right here. So these all of a sudden almost create relative equal highs. On the day, we saw that there were relative equal highs. We have this weekly push down that comes down into this last down close candle, respects it, boom, there is an injection of momentum. Now, what would have changed it is if this candle would have closed below these wicks with a candle closure. That's what's important to me. So I want to go onto the daily and show you how important candle closures actually are. Let's get down to November of 2022 and let's go through price action to understand what your bias could look like. So what could you be targeting here? Well, we have now just swept this high right here, and so you can expect this small pullback. But if price is to remain bullish, then we are targeting these highs as next. So you can expect a move down towards this fair value gap, possibly, followed by a move up to confirm the uptrend. What did we get? We actually got this big move up. It didn't really get to the fair value gap, but it ended up sweeping those highs. So after these highs, you can expect a pullback, because after you sweep a high, you can expect a little bit more of a pullback, but then you expect this high to get swept. So let's look at what are the draws on liquidity. We have these highs to be targeted, and what are the things that have to be respected on the daily? Well, I want to see price coming back into this order block, which are basically two order blocks right now. We have this down close candle and we have this down close candle right here. So I wouldn't really want to see a candle closure below this. even though there's still this fair value gap to be tapped. Either way, the draw is bullish. I would be neutral right here just because we have already swept the high. But I understand that whatever happens, we may get a push down, but then eventually we will come for these highs. So right here, we have this small push down and we have not yet gone for the highs. So here, if I would be able to position myself in a position that would be clear down here, like, because you need to understand, with the power of 3, we are expecting a move lower. And now this move above these highs is basically guaranteed. So if I'm able to position myself on one daily candle, I can enter maybe in a 1 to 2 trade. So what happens after? We have this small move down. This is where I would want to position myself long in this wick, to now expect a move above the high. And that's where we get the move above the high. We tap these up close candles. And now what are we looking for as a draw on liquidity? Well, we have these highs right there, but we now can expect a bigger pullback because we have a fair value gap right here, these order blocks down here, but we also have this daily fair value gap right there, and price just swept 2 highs, tap these up close candles. So now you can expect a lower move. Not to forget, we swept and we closed inside of this whole range, so that's something to be careful about. But either way, what don't we want to see being disrespected? These down close candles. So this to me just comes to show that we are still bullish. Let's keep this green. Okay, now we're still moving bullish. This is where I wouldn't really be trading in general because my daily bias is not clear before we come into these down close candles. Now we have the move into this fair value gap. This is when now I would start looking for possibly bullish moves, even though I would have to understand that there's still fair value gap down here, and this is where I would have order blocks down here. So now I'm bullish on the daily. Does not mean I'm positioning myself, that means that I'm bullish on the daily. So let's keep looking. So now we've gone above this high. I'm still bullish on the daily, and now I'm targeting these old highs right here. This is the next target. We've tapped the fair value gap right there on the daily. So now I'm still expecting these highs to go, and the highs have gone and we have retraced. So again, this is why me as an intraday trader, I make sure that I take profits at these zones right here. But since we have not yet disrespected this fair value gap, I'm still looking for bullish moves to target these highs eventually. But we can have deeper pullbacks because again, we're still inside these up close candles, which is basically a weekly order block. And if we move down, then we can expect still these down close candles to be respected to then move up. What do we get? This is when I'm now bullish. Boom, we have now swept these old highs again. So what I want you to understand from this is that I need you to have old highs and old lows that you want to target. Then I want you to look at the daily down close candles and fair value gaps to see where the market may be reacting from. Because again, now we're just looking to target these highs. And for me, if this wants to remain bullish, now we're not even looking at these down close candles anymore. I'm looking for the market to now respect these down close candles, this bearish move, because if we're now sweeping these highs and breaking lower, that means that we may be targeting these lows. But what happens? We keep respecting the down close candles and we move above this high. Now this is once again where you start remaining a little bit more neutral, but now we target these highs that have relative equal highs right there, and we want these down close candles to be respected. But once again, we've just swept these highs, we've tapped these up close candles, so you can expect a deeper pullback. You can't just expect every candle to be bullish when you are bullish on the week or the daily. You can't expect all to be bullish. You need to understand that you need to play with the daily bias, with the weekly bias when you are trying to position yourself in a trade. And that's what I do every single day. So can we expect a pullback now? Let's see. I would want to see these down close candles to be respected. We have this move back up. This is now when I'm finally bullish again and I'm looking to target the highs. I'm now bullish on the daily again. But these highs, still possible that we move down a little bit more before we move above those highs. Yes, it's possible. There we go. We ended up not pulling back, but now for the uptrend to be respected, this is what I'm looking for. And once again, what are the next targets? The next targets is this. What ends up getting targeted? That, boom, you have this fair value gap that was tapped into right here. it gets respected and it gets this bigger push down. But again, I want these down close candles to be respected before moving up. So we have this big push down, those get respected, then have this injection of momentum. Price ends up respecting this down close candle after sweeping these lows and targeting the high again, and so it continues to give us the entries with the daily bias. So this is how I look at the daily bias in general. I will quickly break this trade down that I took today, where we had on the weekly we had the tap of the volume imbalance and we had this order block right here on the weekly. So once we have this bearish week, I am now bearish on the week to target these lows right here. This is what I'm targeting. So on the daily, this was Monday. Monday was bearish, so now I'm looking to target these lows again. I'm looking to close this fair value gap that is in line with this range right here. And so I look at the weekly once again to give me a target on the weekly. This would be the target. And if you now say, oh, it's not enough, it's a 100 pip move. If you can get 20 pips out of it, you can already get a profitable trade. So I went on to the 15-minute and I saw that we were having this clear downtrend right here, and I wanted to enter in order to target the lows, right? That's what I want to target. So once the day opens, which here in Portugal it's right here, I'm looking for a Judas swing, which is this. And what does this mean in general? Well, this is a power of 3 concept where we expect the daily candle to start bullish. What is the power of 3? Well, I explained it in the different video, but it basically means that if we are looking for a bearish candle, then that candle, if it wants to finish with a wick on both sides, then it basically means that the daily has start bullish and then finish bearish. So if that's what you expect, you kind of want to enter right here on the charts. I personally did not find an entry right there, but where did I find an entry? I found an entry right here. We have order block protecting the trade. We have fair value gap. We have this fair value gap. We have a daily bearish bias, right? That's what we have. We have this fair value gap right here, which is respected. So with this, I want to enter right there, which is where I entered, and the screenshot is going to be now on screen. I entered with a 15 pip stop and the target was this. Once we started moving lower, I took 50% of the position off right here, and then it ended up not going into my full TP and reversed back into break even. But it was still a 0.8% trade. But as you can see, this is how I use the daily bias in general. I look for draws on liquidity, fair value gaps, order blocks, recent highs, recent lows, up close candles and down close candles with the trend to understand when I'm bullish on the day and when I want to enter in longs or shorts in the market. So I know this was a little bit of a longer video, but I really wanted to explain for people that want to know how I look at the daily bias. So hope you guys enjoyed, and I will see you next week. Bye.